On that wonderful note, while our panel members are joining, let me just give you a brief on today's event and how we started with it and what was the background that this PropTech Summit is here today, presented by Realty Plus. I'm sure you all know, even though the term PropTech can be traced back to 1980s, it has only recently begun to make noise specifically in the Indian real estate. And it was 4 years back in 2019 that Realty Plus realized the potential of technology in real estate, building and construction sector, and thus started the PropTech Summit and Awards to discuss the growing influence of technology in real estate and to acknowledge the work of startups in this segment. The PropTech segment was yet in nascent stages, but 4 years later, especially during the pandemic, the PropTech firms have altered the way property transactions are being concluded in India, and building and construction sector is now operating and automizing its processes. And going by what the industry leaders have to say, the year 2022 will continue to innovate in the realm of real estate digital space. So today's Realty Plus PropTech Summit will deliberate on the new and relevant technologies, their correct adoption, and will bring to you the technology experts to share their opinions on growing synergies between the technology and the businesses, as well as various stakeholders, including developers, investors, occupiers, and employees. Another interesting aspect to discuss will be the need for change within the PropTech segment itself, how the tech companies should be more aligned with the new emerging needs of the realty industry and its customers. So this was the brief background of what the summit is all about and what we can expect during the day. So with that context, let's begin the PropTech e-conclave with the first session of the day, PropTech, the future, disruptive tech interventions. The session will be chaired by Gopal Sarma, Senior Partner and Global Lead Emerging Markets, Real Estate and Construction, Bain and Company. Mr. Sarma has more than 25 years of experience in consulting across India, the GCC and Southeast Asia. He leads global practice in real estate and construction sector for all emerging markets and Asia Pacific infrastructure, building products, and B2B services sector. He is also an active contributor to a performance improvement organization and private equity practices. Introducing our eminent speakers in an alphabetical order, I welcome Abilash Haridass, co-founder and CEO, WEGoT Utility Solutions Private Limited. Abilash Haridass is responsible for building awareness of the intelligent solutions and driving marketing initiatives with specific focus on marketing communication, distribution channel management, pricing, market research, and public relations. He holds a degree in electrical engineering from the State University of New York and subsequently worked with Cisco Systems for 3 years in leadership position. Our next speaker, let me introduce Mr. Amit Agarwal, founder and CEO, NoBroker.com, a banking and finance veteran with over 15 years of experience in management, consulting, and strategy. Amit Kumar Agarwal is responsible for defining and guiding the overall vision and direction at NoBroker.com, and he spearheads the company's corporate strategies. Amit is an alumnus of IIT Kanpur and IIM Ahmedabad. He was associated with PwC's banking and financial services vertical earlier. Our next eminent speaker, let me introduce Aryaman, founder and CEO, MYRE Capital. Aryaman has expertise in the development and application of algorithms, big data analytics, and machine learning. This has led him to envision the first of a kind technology-enabled real estate platform. His vision is to democratize real estate by enabling fractional ownership of A-grade rent-yielding properties. Aryaman has previously worked at SoftBank, Moelis, and Enerog. Our next panel member, Govind, co-founder, Insomniacs, has over 10 years of experience in real estate consulting to the leading real estate brands across India. Govind has specifically focused on helping realtors focus on efficiency and drive better ROI. He has handled more than 280 project launches and has helped brands optimize their media costs by focusing on digital media. Our next eminent panel member, Mr. Pankaj Kapoor, founder and MD, Liases Foras, Real Estate Rating and Research Private Limited. Mr. Kapoor has more than 20 years of experience in the field of valuation, consulting, and risk analytics. He is an acclaimed expert in analyzing and predicting real estate market trends in India. Pankaj is best known in the industry for bringing in scientific approach and for developing reliable market database. Our next and final member, let me introduce Mr. Sudeep Aditya, co-founder and managing partner, Oakbridge Asset Partners, and founder, Esswon Holdings. Mr. Aditya oversees capital markets, mergers and acquisitions, and new developments. He is also a technology entrepreneur, having founded Esswon Holdings, a private investment and venture development firm. He is currently building the European operations of Zetwork, a global manufacturing platform funded by marquee venture firms, and is also incubating an EV manufacturing venture. He brings proven expertise in venture building and scale-ups, from optimizing operations, developing cross-border transactions, mergers and acquisitions, and venture investing. So this is our eminent panel, all heavyweights we have here from the segment of technology and PropTech. Mr. Gopal Sarma, I hand it over to you now.
Thank you very much, Sapna, and good morning, everybody, and welcome to the conference. And looking forward to a really exciting 1 hour with this really eminent panel. I have to confess, I feel a little bit out of place over here, given what everybody in this group has accomplished already. But I am personally very excited and looking forward to the discussion we're going to have. Sapna, I know you've introduced everybody, but I think it would be wonderful for each one of the panel to get a quick minute or so to do an introduction. So Abilash, maybe we can go with you.
Yep. Thanks, Gopal. Hi, everyone. Pleasure being here. Thank you for inviting me to speak at this event. As an entrepreneur, why PropTech is important, or why I got driven to PropTech, is primarily because where we live, where we go to work, all of this is changing very rapidly right now. And we are actually at WEGoT at the cusp of PropTech and sustainability tech. So to me, it was a natural byproduct that we go from when all of our solutions go into buildings, which is what PropTech is. So that's what drove me to this. And I am very happy that there is so much impetus in the PropTech space that's happening right now. And I look forward to interacting with all of you.
Thank you very much, Abilash. Amit, it's been fantastic to see the journey you've had at No Broker. If you can just share your perspectives with the audience before we get into the discussion.
No, happy to be here, Gopal. And as you know, I run nobroker.com. And what basically we do is that we connect owners and tenants and buyers and sellers directly with each other. And with the context of the topic today, I think it's very, very well suited, because what we did was to come up in a so-called boring traditional real estate industry. And our entire value proposition is based on tech. Instead of physically brokers showing properties and selling, how can technology basically disintermediate the industry and make the lives of the customer better? So our fulcrum is tech. So very apt topic for us.
Fantastic. Thanks for that, Amit. Aryaman, fractional ownership is happening everywhere in the world. Wonderful to see what you guys are doing in the space. You want to take a minute to introduce yourself?
Sure. Thanks, Gopal, and for the introduction. So what we are doing effectively is enabling access to retail investors to traditionally sort of exclusive opportunities, which have been reserved for, let's say, HNIs, for institutional funds. So most other asset classes, you will see participation in some form or the other from the retail investors, but commercial real estate and real estate as a whole has been very inaccessible for people. So what we are trying to do is create a platform that serves as a bridge, a trusted avenue, per se, for investors to deploy capital in this space. And I think especially in a post-pandemic world, when people have to be a lot more careful about how they are looking and perceiving real estate. So, this platform provides them an end-to-end solution.
Fantastic. Thank you for that, Aryaman. Govind, you want to take a minute just introducing yourself?
Absolutely, Gopal. So I'm Govind. I'm the co-founder at Insomniacs. So to answer your question, the journey started for us. Basically, we were interested and we were looking forward to make some money. Real estate looked like a good place to be in. But then eventually, when we realized working in this industry, there were so many issues that the developers and brokers, they were marred by. And those were the areas we started working towards, specifically in the sales and marketing domain. And we realized that, in terms of how they are playing around with the technology, with regards to the automation, with their workflow, with their leads, and the way, these things are not very efficient. So this is one area where we felt that, there's a lot of scope for improvement. And that is where we started working towards. So in the last 6.5 years, we have worked with, 100 plus real estate brands across India, helping them reduce their customer acquisition costs with regards to the play that we bring on the table with the help of technology, digital, and the data. So that has been our journey so far.
Fantastic. Thank you. Thanks for that, Govind. Pankaj?
We've been into the real estate's risk analytics for last 20 years. And we have been a non-broking realty research company. Main focus has been the real estate prices and associated risks. And slowly we started moving towards integrating technical and market-related risk. And we've been working closely with the B2B market, helping with the mortgage industries, and started venturing out into this year to the B2C segments. Also, we introduced online valuation portal, which is offering valuations of any house property across 60 cities in India. And we would be going forward and remaining a non-transactional realty PropTech company, where we'll be helping consumer and all the associated intermediaries in making decisions, which could be rated projects, rated builders, rated locations, where they can take a decisive, risk-free solutions when it comes to real estate purchases. And they know that market risk and spatial risk, which are involved with purchasing the property, we will be solving those areas.
Great. And I'm not sure, Sudeep, are you on the call?
Sudeep will be joining. He's just facing some connectivity issue, but he's joining in.
Okay, so then maybe we get this started, Sapna.
Yes.
So, and good morning, good afternoon, wherever you are, to all the participants in the event. My name is Gopal Sarma. I'm a partner with Bain and Company, and I'm just incredibly excited at what people like the folks you see on the panel are doing. Real estate forever, since the days I started consulting, has been a dinosaur from a technology, digital, agile, next generation practice perspective. And for me, the last 3 years have just been an incredibly exciting journey to see what's happening in digital and technology. And I think the one common feature that I personally have taken away from all the introductions is everything that this group and many others outside this group are doing from a technology and digital perspective is really democratizing real estate. For too long, it's been a very, very tightly controlled, opaque. There's no information. People don't know what's going on. High costs that don't really add value for customers. And what I'm hoping we can accomplish over the next hour with this group is to actually show everybody how digital is making life a lot easier for the ultimate consumer, because that's why we're all in business. So it's fantastic to be here. Thank you for the opportunity. And let me kick this off with Abilash. And Abilash, one of my anyone who's bought a home hates paying for something that is not really clearly value adding. And today, if you look at an average developer, whoever it may be, they spend anything from 4 to 10% on sales and marketing. That's just an intermediation cost. It's not creating additional space. It's not creating additional amenities, nor is it giving a better quality of product. What is it that you think can be done to actually bring this cost down significantly without impacting a developer's reach or efficiency of sales? And I know you guys are doing a lot of work in this space, so over to you.
So while the sale itself is physical, everything leading up to it does not really have to be, right? And this, combined with the profile of the buyers, which is changing quite rapidly, I think it will very soon evolve into digital first or a digital native buying persona, right? And there's a lot of weightage today on selling physically, but I think with this rapid adoption of technology that's happening right now and this change in buyer profile, I think they will start becoming more and more comfortable making a decision online, or if not making a decision online, at least exploring and comparing online. There are already several technologies like, it's in its early stages like VR, where you're able to explore properties virtually, you're able to collaboratively buy with people in different parts of the world. So I think this is something that will definitely help reduce the sales and marketing costs. Another thing I think that we can also do is to take a leaf out of the SaaS playbook. They don't just recruit telecallers, right? They have inside salespeople armed with a lot of tools and a lot of strategies, and they know their buyer really well. So I think hiring a different breed of inside sales and focusing a lot more on the inside sales will also help reduce your sales and marketing costs. Also, the last bit is that the cost of acquiring a repeat customer is far more negligible than getting a new customer. So in order to get that to happen, if we deliver a better experience, anybody who delivers a better experience is more likely to get a repeat customer. And to deliver a better experience, you have to be aided by technology in whatever way, right? From the exploration to the buying to the legal to the actual living experience. All of this is what we're calling PropTech right now. And a higher level of engagement through maintenance and a sense of community will also help you get repeat customers. And I think the absolute last thing is that, data about your customer, knowing who has the potential, will also help you target those people who will be able to get you repeat sales. So I think all of this put together, this flywheel will help you reduce your sales and marketing costs.
So we can hold you to this, Abilash. Next year, this time when we talk, we'll see 3% reduction in the ad and industry level.
It's a very real possibility that it will happen.
Yeah, amazing. So I'm going to open this up. Govind, you're pretty closely associated with the launch process, and you've seen the kind of money that needs to be spent on sales and marketing. And clearly, yes, you spend money in the launch, you spend money during sustenance sales. But any comments on what we just heard from Abilash? Do you think this is real? What are the 2 or 3 pieces of advice you'd give to corporates in the real estate space to really help them walk this journey, walk this path?
Absolutely, Gopal. So I agree with Abilash. There's a total probability where we can bring down the customer acquisition cost for sure. Marginally by 1 to 2% is a very simple phenomena, but depending upon the current scenario, we are seeing first larger trend happening where the sales are being outsourced to the mandate companies, which in a way are adding to the velocity, which helps you achieve better NAVs in a way that makes a larger sense. Though on the face value, it will look like that the customer acquisition costs are going high temporarily, but overall cash flow when you study and the NAVs are when they are studies, we will realize that there's a marginal benefit and the profitability that gets added to the developer. Now, when it is about the launch process for the developers, my 3 piece advice, which you asked for, I'll limit it to the things that I've observed that people are not doing instead of making it generic. So level 1, I believe, having a control ecosystem of the technology pieces, which can ensure that all the money that you are spending towards media, they are basically in a better way, they are mapped for the ROI, which basically what we call as marketing attribution. Marketing attribution is a larger challenge that we see in the real estate system. In e-commerce, it's a very big phenomena. People work hard on it, but in real estate, people have never been bothered about marketing attribution in terms of what campaigns giving what ROIs, where should we put our next money, whether the offline channels are working better or the digital channels are working better. The second part is, focus on the community management, your own community that you are able to drive, be it a 100 people community that you already have or a 10,000 people community that you already have. Very few brands are making the effort to reach out to the communities and drive referrals in a very effective way. So brands like Prestige, Hiranandani, Oberoi is where we have seen up close where these numbers are pretty high at 20 to 40%. But for other brands which have the capability, they are not creating the technology interfaces where their ecosystem can come together at one place. So between these 2 places, I believe that's a larger play where the developers are not working too much. The third would be ensuring there's a huge workflow automation into the system. They're still consumed by a lot of phenomena where the sales team was doing one-on-one calls, one-on-one messaging, one-on-one communication. The workflow automation tools which is available to the larger giants of the ERPs and CRM, those are the interfaces which are available, solutions and modules available, but people are not using it to the full extent. That means the technology is available, the adaptability become a huge problem. So between these three things, I would suggest that, if people are taking care of it, and of course, the fourth, if I have to add, would be the virtual experience bit. In Corona phase, we all saw the importance of it, but now when we are back to the physical phase, people are not paying much, focus on the virtual experiences. I believe that going forward is going to play a very, very important role. Customers are not going to go to 20 sites; they'll go to 10. They'll filter down 10 onto the basis of virtual experiences they get. So yeah, these are the flow places. I believe the corporates have to be very solid about making sure that they have a right inroad and right face that they're projecting outside.
Fantastic. Thanks for that, Govind. Before we go forward, just want to welcome Sudeep, Aditya. Sudeep, welcome to the panel. And if you'd like to share, I think you're on mute, Sudeep, but if you'd like to share a few words about yourself before we continue with the discussion.
Sure. Thanks, Gopal, and apologies to everyone for my delay. I was wrapping up another call, and as you know, I would give you a bit of a background since most of my fellow panelists are new to me. I co-manage two ventures, one in technology and the other in real estate. On the real estate side of things, we are a real estate investment bank. We focus mostly on the Bangalore market. We've done roughly 1,000 crores of fundraising in the Bangalore market, predominantly for commercial assets. We focus on fundraising, mergers and acquisitions, and we're currently working on our first non-Bangalore transaction. So that should be closed in the next 60 days. And we principally focus on dealing with private equity funds, institutions, etc., who would like to expand into India. On the technology side, it's a slightly different form. A German partner and me basically run a venture builder where we help Indian and Asian startups expand into Germany and Europe. And I currently co-manage the European operations of a company called Zetwork, and Zetwork is a unicorn from India. We were valued at about 2.5 billion, 2.7 billion in our last funding round. And we basically manage global manufacturing operations across sectors, aerospace, industrial, automotive. So a customer in Germany places an order, we get it manufactured in India or Vietnam and send it over. So that's a business we run. And Jan, who's my German co-founder, and me manage the European operations. And third, I'm currently working on a EV manufacturing venture, which is in an early stage startup business. So principally two businesses in technology and real estate, and I'm looking forward to being part of this PropTech. Sounds exciting.
Fantastic. Thank you, Sudeep. Yeah. And for all of you listeners out there, as you'll see, there are a lot of zeros around this panel. And please listen very carefully to what they say, especially if you are yourself getting into the startup space. Amit, moving over to you and what's probably all of our favorite topic in the real estate space, the role of the intermediary. Just like sales and marketing has a huge cost, there is a fairly significant cost and I would say level of convenience / lack of it associated with all intermediaries in the real estate space. And I think it's a space that you've set out to crack wide open and bring more value to the customer. So fantastic. Thank you for doing that. First of all, as a customer, I'll say thank you for doing that. The question I have for you, Amit, is we've seen this in the physical world of broking that for all their challenges, brokers provide a pretty valuable service in terms of connecting buyers and sellers, and there is no regulatory framework that really protects them. And it's actually quite unfortunate that they have to go from pillar to post to follow up on actually getting what is legitimately due in terms of payments. So given the lack of a formal regulatory framework in this space, how are you addressing this? Is there anything you can share? And how do you see this actually panning out going forward? I have two questions for you, but the first one is really around regulation and what do you really think is required to make this a much more transparent and seamless space in this country?
So I believe that let's basically take this question from a consumer point of view. So what we are discussing is the role of technology. So the way in which we at NoBroker basically have always approached it, not technology first, but customer problem first, because many a times, otherwise you end up making things or creating things which are exciting to you as a builder. What I mean is as a startup builder rather than what customers need. We or brokers or any other institution or a party who is helping customer is basically doing 2-3 broad things. One is that when you want to buy, rent, own, sell any property, one is that you need lots of options, be it options of tenants or be it lots of options of properties to look at. Second thing basically which you want is best price, in terms of the transparency as to what is the price of the asset. And third is based on this, how can you make the best decision that you can. So we are basically focused on these three things. That's our primary objective. So to give an example, when you are searching, as far as more options are concerned, can machine learning, can artificial intelligence, the way in which it helps a typical TikTok or a share chat to provide most customized content to you. Similarly, how can no broker through technology, and how can broker through its intellect provide the best options to you. So you click on one property, then the next property basically changes based upon what you are liking. And the second one is about the price. That right now in the building that I am sitting in, I have no idea at what price was the property just up above me was sold. And many a times people play with this data to manipulate me into making a decision. So we basically pull all of this information from government sources. We make it transparent, make it much more available for people to take decision, which brings me to my third point, is how to make decision easier. So can there be a perfect tech broker who basically gives you all the options that you can have, who gives you all the information in terms of locality, amenities which are close by, in terms of the most price discovery and transparency, so that you can make the decision. So I wouldn't basically, not a big proponent of regulations in this industry, but more of a proponent as to how customers can make better decisions. And if that involves regulation, then of course.
Thank you so much for that, Amit. Very, very helpful insights, and hopefully we'll all get to use this. I hope this really spreads like wildfire, and all of us get the option to use it. One follow-up question: as you do this, and some of the data that you're talking about is incredibly valuable data because it just doesn't exist. I mean, if you look for transactions data, if you look for intelligent algos that actually help you create archetypes that enable you to search better.
Correct.
What are some of the opportunities that you think that will open up for the customer and for somebody like yourselves as the industry moves along this technology journey?
I think from the perspective of decision making, it's going to be a boom in terms of how you make a decision. Right now, the decision making is very, very broken. As a customer, you search on internet, you get some half-baked information, then you call a couple of brokers, you try to basically triangulate where you are getting at. But now what we have seen in the past couple of years is that the government is trying on its own way to make data much more democratized. For example, in Bombay, if you need to do a rental agreement registration, then you need to go to government office, take half a day off and do that rental agreement registration, you along with your landlord. But now it is no longer required. So for past couple of years, no broker basically through its partners will send a person to you at your home on a Sunday afternoon, and you can basically, using a laptop, you'll take your fingerprint, Aadhaar card, and a formal agreement registration gets done. Similarly, what now we are basically doing is that government does make this data publicly available as to at what price the transactions are happening in buy and sell. They are quite cumbersome to basically extract because many of them have talukas, and basically the segregation is not in terms of the modern locality names, but in terms of the old locality names. So all that effort we have done, and we have basically extracted that data from the government servers and now arrange them in a way so that you know at what price the latest transactions happened, so that you can make a very good decision. So basically imagine a perfect broker who talks to you, who takes your requirement, serves you an option, and based upon your response, immediately changes the next option that he's going to serve to you and keeps on doing it. So I think that the way forward is much more involvement of AI, but the main objective is to help the customer make a customized decision and serve him perfect data as close as it is possible. So that's a direction that we are moving in, and a lot depends upon the data which basically we keep on getting from the government. But the decision, the end path is towards that.
Great. Well, yeah, this sounds incredible, and I just hope I really wish customers start using this more and more and more, because this can only help them. Pankaj, just moving to you and linked to what Amit just talked about. Do you see India as having the data platforms that can actually make this real and democratize this without folks like Amit having to wade through tons and tons of red tape just to extract the data? Where do you see the quality of data and availability in India right now?
There are two sides of it. Like, the way we have created Aadhaar, and then we had the several such opportunity emerging after the Aadhaar got really created. I think for the properties also, the government in the current budget has mentions about integrating the land record and creating a unified database for that. It's a beginning, but going forward, I think there would be a kind of a unique property ID for each of these property, which will be available. I'm saying that next 4 to 5 years time will be reaching over there. Having said that, I also feel that the deficiency of data itself is an opportunity for most of the PropTechs which we have here. And that's where the science and AI and machine learning and many other things can really come as a rescue and can create a lot of data. In fact, picking the cue from what Amit was mentioning, that what we require is various recommendations engines through which helps the consumer to take a decisive decisions, because property purchase, it's a very complex subject. There are spatial requirements where my wife works, where I work. Do I have in neighborhood the good colleges and schools which can satisfy the requirements I have for their educations? What kind of ratings for those particular colleges? And then it comes to economics, like, there are several properties available, as he mentions about different prices, different type of opacities. And there may be a reason for their pricing to be high or low, but there's not much data points available to adjudicate that, is that price right or wrong? And then comes like, technical aspects related to, I'm buying from that particular builders, will he be able to really deliver in time? The properties under constructions, what kind of price correction risk, what kind of location risk, how the future development is going to take place. So I'm saying there's the enormous opportunities which are available in this particular framework. And I'm saying that there are various proxies through which we can really work it out. We coined another, index to define the quality of location, because you may have amenities available from Google APIs today, but you have got X grade of schools and Y grade of schools, and the user, he sees the number of schools, there's no grade of the schools. How would you really find it out? There are hospital available, but school is not available, market is available, or something is not available. So how we are qualifying a spatial context related to grading that particular location. So if a user is there, I've given him 10 options, but 10 options, how he's rating and all those things. There are enormous opportunities which are available, and I think long way to go. So I do agree there are going to be a good amount of data going forward available. Most of these PropTech itself will be a major contributor of these data, because they are already capturing various type of data. And I think the unification and democratizations of their data itself is big utility, not really completely dependent upon what the government is going to really provide. Having said that, but today's the opportunities lies that in the deficiencies of these data. How do I really create the data, which could be satellite imageries, doing classifications, doing overlaying our own sets of the data, doing some kind of regressions to propagate and coming with the answers. There are numerous opportunities which are available. So I see that we would get the data. We have certain data in the last 4-5 years started coming by. Many states have really made land transactions available or IGR data available. But having said that, there also is a deficiency in data. So if you look at Maharashtra, we have got IGR data available, but you can't make a pricing decision based on those particular data because it's very complex. So I see there are issues and there are opportunities available. in that perspective. I see data is available to some extent and will continue to be propagating more and more going with time. And I see all the stakeholders will be putting in.
Thanks for that, Pankaj. And we'll come back to you on some of the questions around data specifically. But Aryaman, moving on to you, fractional ownership can really democratize real estate ownership in this country. How do you see this moving forward? What are some of the big segments where this is going to grow? And what are some of the barriers to this actually happening?
Sure. So, this entire space is actually quite new. It's quite interesting, and it's growing at a rapid pace in the last 2 or 3 years. But to understand the application of this whole fractional ownership framework, first I'll just talk about the two stakeholders. So the first is the seller, or quite often the developer. The issue that the developers are having today in this space is they don't have access to private equity capital, except from a handful of funds, such as Sudeep mentioned. He's doing a large transaction. So quite often you have institutional players who are the only option for developers. On the other hand, you have investors. Now, Indians in general, like rental income. Commercial real estate is a good avenue to get it. But because of the perception around commercial real estate and the data asymmetry consistent with what some people have spoken about, quite often people don't end up investing, or they burn their hands the first time. So quite often you will hear people saying that I burnt my hand in an investment. But most importantly, they can't invest smaller ticket sizes. So that's the biggest barrier to entry. Now, what our platform is doing is it's bridging that gap. So it gives developers, it gives property owners access to reliable private equity capital, a certain pool of capital that hasn't been tapped into previously, which is these sort of consortiums of retail investors that we form. And for retail investors, we provide a seamless experience where they can come into our platform, within 5 minutes, entirely digitally, be onboarded into a property, start earning their rental income. They know what the underlying asset is, so full transparency as well. It's as easy as investing in a mutual fund for them. So there's no operational headache, none of that. So where we are seeing this grow in the next couple of years, or what we are targeting to do, is take on a lot different kinds of assets in our portfolio. So currently we are primarily in the office space, but commercial real estate is very broad and comes in a lot of shapes and forms. Hospitals, schools, warehouses, industrials. So we are exploring how we can expand this. But effectively trying to become a platform for the varied real estate offerings for the different kinds of investors that there are.
Fantastic. And just picking up from there, and Amit, maybe if I can pull you into this part of the conversation. I know typically your customer pool today is looking at full ownership and not fractional. But do you see this as a large potential pool if, as Aryaman was outlining, some of the challenges and issues are removed and it becomes a lot more affordable? Do you see the retail investor wanting to buy fractional ownership of commercial real estate or hospitals or warehouses, for example?
No, I would basically fully agree with what Aryaman is saying, because see, this is a big arbitrage. Somehow for the first property, I fully understand that as an individual, as an emotional attachment, first property is your need, which you want to buy for your end use. But subsequently, if you look at strictly from the returns point of view, it is a bit puzzling as to why we as Indians, we continue to buy residential projects when it is almost guaranteed that the rental yield will be 2 to 3%. And you need to be a bit lucky to ensure that you get oversized capital appreciation. On the other hand, the commercial projects, I'm not talking about some Infosys office, but the small commercial properties, right, from a 50 square, 70 square foot shop to a 3,000, 4,000 square feet warehouse or a big shop in a mall, they have extremely good rental yield. They have 8 to 10, 12% rental and a very decent capital appreciation. So I think this is like a commercial opportunity in India is like an open secret, which everybody knows, but somehow only sophisticated HNI investors take part in it. And so this is puzzling to me also, and I often tell my friends that they should surely explore commercial opportunities. And I think it's a matter of time when more investors will wisen up and experiences of some investors as it is becomes better and better. I'm sure this is sought to grow.
Fantastic. Thank you for that. And Govind, moving over to you, we've all been talking about how exciting real estate is going to be in the next 10 years. Companies have done incredibly well. If you look at all the major listed companies in the last 12 months, their booking values have shot up. They're all talking. I mean, we've got launches coming out of our ears.
Absolutely.
Given that you focus primarily on the launch phase of the selling process, what more can be done in digital to enable launches? And again, what can companies do differently? Given that whatever we do today, and notwithstanding all the ARs that Abilash talked about earlier on in the conversation, what is it that can be done today to actually make this a much more digital process, as distinct from the current fairly painful, mostly physical process that people go through, both from the company perspective as well as the customer perspective?
So I believe what the first point which you mentioned with regards to the numbers that we are seeing as of now, at least for the companies which are listed, this is one trend that we got to observe, that the branded play is getting better and better over a period of time. The customers, the way they're even responding to the communication that the branded developers are putting. If in our digital world we call it CTR, you put a same communication with a different logo of a prestige versus a C-grade developer. The CTRs are much higher for these branded players. Now, these branded players have started understanding these things. One thing that we got to give it to them, that and that's the reason we are seeing this traction of suddenly prestige coming into Bombay and getting aggressive, getting into different states. Lodha making certain moves. Now, in terms of going out with regards to the launches, the way things are moving, one thing is for sure that of course, in the Maharashtra market, at least because of the premium waiver, we saw more number of launches. The approvals coming in, which should mean more launches. Overall, we got to understand the velocity of the market is not going to change. If there's a 10,000 absorption capacity per month in MMR, it's going to remain same. If it goes higher to 12,000, next month it will be coming down. So the overall play is not going to change. The customers who can upgrade is going to remain similar. But the 2-3 areas where we can change the momentum in our favor, take some benefit of the future today, is what Amit mentioned as well, where the transaction management, I believe the way it is being done, not from just from the intermediary point of view, even from the developer point of view, how the experience at the transaction, the whole transaction experience, how it can be converted, how it can be digitized, because there's a huge traction that we are now seeing from the NRI markets, which in a middle period around 2015 to 19, it was very sluggish. Now suddenly there's a huge traction that we are seeing all across our portfolios, where the HNIs and the NRI markets are just waking up and they want to invest, specifically in the cities like Bangalore and Hyderabad. These are the two places where we're really seeing great traction. So to digitize their whole ecosystem, their project showcase, is going to be the very important element at the level 1. The level 2, which I spoke earlier about, all this data which comes to you, what is it that you do with it? The more and smarter that you get with analyzing this data, using it, like what happens for a branded developer, he doesn't just have one product option. Customer, let's say, enters at the top of the funnel, which is priced at 2 CR, but they have a different offering at 1.5 CR. But is your system very well versed, or AI/ML is helping you understand that this particular lead or this customer could be put into a different portfolio, like a Provident? Puravankara has a Provident, a customer who's qualifying at the top of the funnel for Puravankara initially, but later stages it is not qualifying. But how it can percolate to a Provident offering and convert it, which will eventually help reduce the customer acquisition cost. So the data play, as I spoke about, and projecting into all the launches in the best way possible. Your website should talk. Your website can be a book my show. I know the developers cannot really showcase their inventories which are available. But imagine the kind of transparency that you'll be able to give, where your corporate websites are not just talking about the project and their showcase, but giving you an opportunity with ERP integration to showcase what inventories are available, and taking an EOI directly, where the customer doesn't have to even bother about whether it is going in the right fashion or not, whether this inventory is available or is not. If this transparencies can be achieved, we will see a very large attraction, and the big players, the big giants, the top 20 players can definitely afford to do so, because they are moving towards transparency. The brokers are aware about the available inventory. So these are 2-3 players I believe that can be made at the launch phase by the branded players, which can transform the journey. And for the smaller players as well, this would be helping them to fight with these big guys, because the consolidation in the future is destined to happen. But those players who can continue making their brand better and better, the better is the future for them. So that would be my part of the advice in terms of the launch phases, how they can be catered.
Fantastic. Thanks for that. And just picking up on some of Govind's comments, maybe Sudeep, if I can ask you to come in over here and bring perspectives from other sectors. You've obviously been in a lot of other sectors beyond real estate. How have you addressed some of the data challenges in those sectors? And given that we all seem to be converging on data as a challenge, how have you guys addressed some of the data challenges? Say EVs, there is no data really in the marketplace beyond European performance data or US performance data. Any lessons for the real estate community on how to manage some of the data challenges in the space?
Sure. Gopal, actually, you'll be surprised at the creative ways in which some companies are using data. So maybe there isn't data in a public forum, but there are enough substitutes, or there are enough avenues in which you can harness publicly available data to bring in a new offering. And PropTech is a broad term. PropTech can be put into 3 buckets. I'd say one is the consumer bucket, which Amit explained very well, which is the bucket he's playing in. There, I think it's a question of heavy lifting, right? To aggregate data, which is land records and all of that stuff, you need capital to burn, and it'll take you years to digitize that. The B2B side of things in PropTech is where I'd say there's a greater focus on immediate value proposition. So if you're going to cement for you for the next 3 years at a discounted price of this, will you accept that proposition? So there, it's a question of how viable you are to his current alternatives, and those data points are immediately available. You can, as long as they place an order, you can pull enough financial data points to show how more profitable you are. The third bucket is where I really see technology influencing the real estate sector, which is the hybrid of financial services and real estate. And here I'm bullish about it because real estate, what most people don't realize is, for the common man, the biggest purchase they've made in their life, right? And in India, if you have a person with a 20 lakhs per annum income, he's buying a flat for 80 or 100 lakhs, that's 4 to 5x of his annual income. So I would say the next step is going to be to find innovations in how you can make this more affordable. And to substantiate what I have in mind, I'll give you an example. There's a platform called Home Partners in the US, which is owned by Blackstone. So basically what Home Partners does is it helps buyers who don't have the capacity to make a down payment. So in India, let's say you want to buy a flat for 1 crore, you will make a down payment of maybe 25 lakhs and take a home loan on the rest amount. What Home Partners does is, if you want to buy a condominium for $100,000 in the US and you don't have any down payment to make, and at the same time your credit score is not good enough, they will buy that for you and they will rent it to you for a period of 3 to 4 years. And you can buy back that asset, that home, after 4 years. So you technically, it's called a rent to own system. And Blackstone, with its balance sheet, is able to drive this. So what happens is you get an entire new universe of customers, and you're able to give them access to the home buying experience, which was earlier not there because they were not credit worthy. And the data they're using is their repaired credit score. And as your credit score gets better, maybe you got a job, you got a promotion, you have more liquidity at hand, Blackstone's be able to make an arbitrage. And they're doing this across tens of thousands of units. They go into towns, not just the mainstream markets, but they also go to tier 2, 3 markets in the US and buy apartments by the thousands. And they rent it out. And after 4 years, people, of course, there's a ratio there. Maybe 70% of people buy, 30% drop off. But even then, you are completely changing the game by using credit data to convert a person who was renting from you for 4 years, and then you flip it to him for a premium. So Blackstone buys it at $100,000. They sell it at $125,000, making a $25,000 profit, plus they collect rent for 4 years. So this is a financial innovation where you take a heavy asset like real estate and hand it over to a person who earlier was overlooked by conventional banks and who was overlooked by conventional developers. So this is done by private equity because they have the balance sheet strength. So just to summarize, I'd say data will be looked at differently. B2C, as Amit said, is a heavy lifting game where you go through the grunt to get all the data points, whether it's in India or abroad. And that data becomes a strength in terms of running your front end app or website. B2B, it's all economics and money. Developer likes your offering, you're going to procure steel for him. If you are, say, 10% cheaper than his current procurement, he'll be locked in for 5 years. He's very happy. And the last is financial services, which is the one I'm most bullish about. India, especially as a country, compared to the West, has very high credit rates. Home loan, even now, it's 6.7%. In Germany, you can get a home loan for less than 2%. If home loans here jump to 8%, 9%, it's actually the costliest in the world. And oftentimes you're locked into a 15, 20-year mortgage. I personally see that organized grade A developers will see increased market share. And their market share is right now in single digits. If you put all the top developers in India, single digits compared to the overall potential housing market in India. Because many people still buy a site and build a house when you could have bought a product from a builder, but you couldn't afford it. So financial innovations, that's going to be a significant play. And for that, you will see balance sheets of private equity, pension funds, insurance companies who will study your credit, study various data points available to you to see how creditworthy you are, and then welcome you into their products, whether they want to rent and sell it out or discount it, things like that. There'll be a lot of financial-driven innovations in real estate in the next half a decade.
Amazing. Thanks for that. And I think that's a great segue to you, Pankaj. You've already talked about some of the issues around data. So maybe we just focus this question on the customer. Ultimately, I think Sudeep made a really important point that all of us kind of intuitively realize that for 90% of the people, buying a home is the single most important financial decision that they're going to make in their lives. And it's the single largest commitment they're ever going to make, right? How do you actually help these customers reduce the risk of their purchase? Because at one level, you buy a home, then it's got no value because you're living in it all the time.
Yeah.
But at the same time, most people want to have a home, at least on paper, where they see the value going up and they're not taking a bath on the investment, right? So very, very crisply, if you can share, what are some of the things that can be done to reduce the risk for the home buyer, purely from a value perspective, not from a delivery, not from developer risk, but purely from a value perspective?
Yeah, I'm saying that, there are certain myths which are, there is like, the 2 to 3% rental yield is what the residential offers. It offers because the capital values have appreciated disproportionately high. And these are not a productive values. And that's a basic reason. If you look at that last 7 to 8 years, we have seen the lack of appreciations or stagnancy or price corrections in the real estate framework because the rental yield were from 1% or 2%, and it has gone up to become 2.5%. Optimum rental yield for rate and return regimes are available. So I'm saying that there are perspective when it comes to the a decision a home buyer has to take, like he's buying a property and someone is selling in the outskirts of the market, and based on the future infra prospects that is going to really take place and things like it. Now we have seen India, the way the India has progressed and the way the India is progressing and things like it. One has to really build the modeling in a manner that what is the probabilities of density getting created on those particular areas, how the infrastructure is going to really take place, what kind of a correlation the density has with the real estate prices. And based on that, we can really give the perspective. If you sit down and analyze the real estate markets, where the price correction risk and the execution risk were higher, you would find the projects which were into undeveloped location, uninhabitable locations, or they were extremely high cost properties and all those things. That kind of thin slice, you can take it and find it out. I see these kind of models which are essentials. So we coined certain words like, there are like market value. We said that instead of market value, we need to come up with the productive value where the price appreciation prospects are higher. We also coined economic densities parameters to qualify the locations and it's a spatial context in the sense like where is the last built up area, how far it is from city centers and those particular contexts. And I think those are the things which can really solve a lot of problems. Otherwise, what happens, people say that the airport is coming and then the future appreciation is going to be very high, and that's how it really gets built in. But real estate is a space science, like, any locality, you have seen that it moves because of the context and things like it. People talk about that SEZ is coming or economic hub is getting built and all those things. It takes its own time. It requires critical mass for that locality to get developed and things like it. And there have been a certain patterns under which really they perform. I'm saying bringing all those things together to solve the problems of the consumer. So there are two types of risk we look at. One, because 90% of property which is sold in the real estate is under construction property, especially when the builders floors are coming. And the way the stress in the market has come, so there is the execution risk, and second comes is the price correction risk in this quadrant. So we carry out the stress testings on the projects and help. So far, we've been helping the B2B market lenders and all those things who would probably take a call with the builders and the projects. Now we started extending this to the consumer. So the consumer can come to us and say that I'm looking at purchasing property. They can search the property and across all these platforms, whether it's 99 acres, Magic Brick, No Brokers, and all those things. But there are several options available, and they want to be sure about is the builder's profile is good enough? Will he be able to deliver in time? Is there what kind of price correction risk? What kind of prospects related to the properties? The price at which I'm buying, is it a productivity in that particular segment or not? Those are the things through the models can really. So this explain the default probabilities. Based on that, like the whole insurance market and the mortgage market is dependent upon, I think, similar kind of a. So we started extending this particular features to the consumer. I'm saying that we still haven't really gone full-fledged to the consumer, but high net worth investors and all those things, they started reaching out after shortlisting the properties to do the assessment. And you won't believe they're willing to pay. So there is also a myth which is said that, like, consumer are not willing to pay for that, for the informations and the data, but I feel so it is changing. And then consumer started feeling, and the way the risk in the market has increased, I also help this cause that by paying 10,000, 15,000 rupees, if you have got a better mental peace into any kind of purchase decisions for which you're going to be entangled for next 20 years, people want to be really sure about that. And that's what
that's very interesting, Pankaj. And, just moving to you from this, Aryaman, as you think about fractional ownership, the management of risk at a much smaller bite size of investment is still important, because a smaller investor is investing what he or she can and still wants to have the same kind of quality of protection on risk. So I'm sure this kind of a service, if you can democratize it. Any thoughts on that? Have you guys thought in this direction?
Yeah, absolutely. In fact, this is where a lot of the tech comes in. We've spoken a lot about extracting data, sort of transparently putting it across. So what we do is that in real time, once someone invests into a particular opportunity, he can sort of track the micro market data, the new leases, any updates in that area which sort of impact his price. For example, metro stations coming up. So, we've sort of got about, let's say, 30, 35 different data points spread across real estate, infra, literacy rate. And all these things keep updating in real time in the dashboard. So that way they also get an understanding of the different parameters that impact appreciation, because the current myth is that, 5% or 7% or an arbitrary number is what a property appreciates by. But quite often, a lot of these other things which are coming around the property help make a more calculative decision. So we try and take out the subjectivity and help support our arguments with numbers and show all of that transparently to investors. But most importantly, onboarding 200 investors, 300 investors into a single property, it is very intensive. So without tech, I think it would take us, maybe over a week doing it manually. But since we streamlined the entire tech process, it's very easy for an investor. Like someone can go to our website right now and in 5 minutes complete an investment into a property in Bangalore. We've put virtual tours. We are integrating full interior virtual tours as well. So currently we do an exterior render of the development. So all these kinds of things which increase the touch and feel factor. So, by bringing them in, it gives a lot more comfort.
Fantastic. And kind of to round this off, and Abilash, I'm going to come back to you a little later with a couple of specific questions. But Sudeep, again, kind of taking an outside-in view, you spoke at some length on some of the opportunities specific to PropTech, and I love the framing across the three buckets. I think the linkage between FinTech and PropTech, and in some senses, opening up the ownership opportunity at a much lower cost is going to be the next big wave in this space. But stepping away specifically from PropTech, FinTech, and more from a startup perspective, what do you think a successful startup in the PropTech space in India will really need to do? And any closing thoughts coming from an outside-in perspective there?
Yeah, sure. Gopal, I think some of the rules that you use to build a startup in any other area also apply to PropTech, right? And since PropTech is such a big universe, the rule number one is to probably identify pain points that you can solve, which Amit mentioned in the beginning of our discussion today. It's very easy to get lost in the universe, try and do too many things, try and become like the Paytm of PropTech, which is the way south. The better way is to identify who your end user or end customer is and solve problems for them. And there is enough of a scalable runway if you do that. You can build a multi-billion-dollar company solving one of the big problems. It could be the front end, which is access to properties, or it could be back end procurement or finance. You don't need to actually be in multiple buckets. Sometimes when you look at startups, they give you a scenario where after they raise Series B, they will go and do n number of things, which is what you shouldn't be doing. You should be actually zoning in and doubling down on that. So rule number one would be to focus, because India offers you a 1.4 billion population. So the market is big enough. If you say even 2% of the population going to go buy new properties, that's big enough. The second thing is how startups can evolve into the next level, right? A startup that does, let's say, a 50 crore revenue run rate, if it has aspirations of growing 20x into 1,000 crore, it will have to usually tie up one or more things to accomplish that. If you're talking about a B2B startup, supplying building materials to builders, they need to tie up both supply and demand from builders, supply of materials, and an assurance that prices will be what you promised, irrespective of volatility in prices. Have you hedged enough? Okay, have you accounted for currency risk? Because it's easy to make a promise in India, right? And it's tough to fulfill it, especially when you're dealing with problems at scale. If crude oil collapses by $20 or goes up by $20, will your building materials change? I mean, the PropTech platform can be helpful, but if you cannot fulfill the end user promise, then that PropTech proposition doesn't make sense. So the second would be to actually fulfill the offline use case of that product, whatever it is. In the purchase of apartments, people still go to the site and make a physical visit even today. And people are actually coming back. They probably do discovery on platforms like No Broker and Housing. They note the builder and they go and, as a family, go and check out the property. So how you match offline with the online delivery, whether it's consumer or B2B, that's the second thought. And the third one is to look for ways in which you can scale up beyond your immediate environs. There are some startups which are, setting up a base in the UAE, for example, looking at the property market there. Some of them are looking at more institutional capital. Like, for example, I was in Germany a couple of years ago and talking to one of the big private equity investors there. And he invests only in real estate in Germany and the US. And I asked him why he never looked at India. And he said, it's too risky. I don't really know. I told him Blackstone is there in India, but then he felt it was too opaque. So what some of the platforms like Aryaman's can do is to actually make it more transparent to end investors, whether it's individual investors who want to buy 1,000 square feet or an institution which wants to buy 100,000 square feet plus, is to make this more transparent for them, because India is still the wild west of property. There are markets, maybe Noida, for example, which are seen as a little more risky. If you do a risk index for India, Noida, Gurgaon will be probably more risky. The south is probably less risky. Mumbai is somewhere in the middle. So all these platforms, how do you remove risk or perceived risk? and how do you solve problems for the end user? So that would be the third, point that I'd like to make. And eventually they'll figure out things.
Sorry, Sudeep, we have 3 minutes left, so I am going to have to step in here. My apologies for that. But just Abilash, a minute from you on anything that you want to add to what Sudeep said in terms of what startups need to be looking at before I take a minute to wrap this up.
No, essentially, I'm just going to echo what Sudeep said. The rules that apply to startups that are not in the PropTech space still apply here. Focus on, being persistent is also something that I would recommend, because this segment hasn't traditionally been used to adopting technology very quickly, but I think it's happening right now. A little bit of persistence, I think, added to other rules that already apply, I think will help.
Great, fantastic. Thanks for that. For me, it's been an absolutely fascinating session, and I just want to thank all of the panelists for sharing your time. And 3 or 4 key takeaways. The biggest is do what you do, wearing the customer hat, and just make sure that whatever you do is enhancing customer convenience. And I think that's clearly one of the recipes for success. There is an enormous market. It's a huge untapped opportunity. There's a lot to be done, and data is going to be front and center. To me, that's the second key takeaway in terms of how do we actually get better quality data, and very interesting insight on how to use the data that is already available in some fashion to actually make better decisions and to reduce risk. Sapna, I'm not sure if there are any audience questions. We only have 2 minutes left, so perhaps the audience.
Yeah, we have few questions. One of the questions that we have just got is, while we are quite mature when it comes to buy and sell technologies, what about technologies in other segments like sustainability, construction? Abilash, would you like to take that, as you are already into the building construction technology?
Yeah, there's a lot of traction on the sustainability side. So like I said, we help buildings save water right now. We help them manage the entire water and reduce the demand for water. This is a resource that's not available. And a lot of developers, both commercial and residential, actually industrial as well, are looking to adopt more sustainability measures in their campuses. And there's a lot of traction also with the government mandate now. There's a lot of buzz around ESG as well currently. So I think this is a work in progress, but there's a lot of steam that's building up right now.
Yeah, and just if I could add to that, Abilash, we ourselves are doing a lot of work on sustainability in the real estate and construction space. I think it's also a myth that incorporating sustainability adds to cost. It's absolutely, there is a lot you can do, whether on energy as a service, whether on more effective and efficient construction materials. There's just a lot you can do on using technology, using what is available today to enhance sustainability and actually reduce cost.
So that's the other thing that's that's the other thing that's kind of come up, because a lot of startups are also innovating on the business model. I mean, there is not really that much of a capex. Everybody wants it as a service right now. So in the overall longer scheme of things, in the life of a building, I think it will help you reduce your OPEX costs in the life of the building. So I think it's a win-win for the buyer and the seller.
Great. With that, I think we are on time. Thanks to the panel for being incredibly efficient in responding to the questions and at the same time going deep and providing a lot of insight to the folks on the call. Sapna, thank you very much to everybody at Realty PropTech. I think we all had a great time going through this session. Any closing words from you before we wind down for now?
I think that was a wonderful session. I don't know if Abilash was able to answer the question that we had from the audience.
He did, yes.
Okay. Another question that I will quickly take, which is a very interesting one, is that they have asked is, since the PropTech coming in, many new technologies, which are the technologies that have phased out, which are still relevant and which are going to flourish going forward? So
maybe I can take that question.
I leave it to you. Yeah.
Maybe that's a question I can take, and I'm going to answer it in a slightly different way. I think we are way too early to even start figuring out what technology is going to be. I mean, yeah, the traditional way of doing things is going to change, and we can all safely assume that a lot of that is going to get phased out. But in every element of the value chain of real estate, whether it is in business development and land acquisition, whether it's in design, whether it's in design for more efficient approvals, whether it's in launch, whether it's in sales, whether it's in construction management, construction technologies, whether it's in sales and marketing, handover and community development. Every technology we're seeing today is really at a very, very early infant stage. And this is not just in India, this is around the world. And whoever owns these spaces is going to own a huge, huge opportunity going forward. It may not be the best technology, but if it's a good enough technology that provides what the customer requires, I think that's the golden grail. So before we talk of phasing out, let's talk about phasing in and making sure the whole space gets technology enabled, digitally enabled, and analytics enabled, and data enabled. And with that, again, thanks to the panel. And thank you to Business World and PropTech Realty. So with
Thank
that,
you so much.
have a great day.
Yeah, thank you so much. That was indeed a wonderful session. Thank you to all our speakers, Mr. Pankaj Kapoor, Abilash, Aryaman, Amit, Govind, and Sudeep for being here with us. And thanks, Mr. Sarma, for that wonderful moderation of the panel. So thank you everyone for being here with us and for taking the our audience questions as well. Thank you so much.
Thank you. Have a great day. Bye-bye.
Thank you, Gopal. Thank you, Reality Plus. Thank you, Sapna.
Thank you. Bye-bye.
Gopal, you did good. Thanks a lot, guys. See you soon.
Thank you. Bye-bye.